All right, guys, welcome back. So today we're going to be talking about getting approved with bad credit. So ideally what I like to talk to my clients about is starting with the pre-approval early on. And the reason why we do a pre-approval is not just to get you pre-approved for a mortgage, but we try to do it to catch any underlying issues that might be happening with your credit that you don't know about, right? There might be a hidden collection there. There might be some outstanding balances. There might be some late payments that might not be correct. And early on, some of those things can take time to kind of rectify. So what I would talk to my clients is get pre-approved early. So if you're looking at buying a house, let's say 3 months down the road, start your credit checks and your pre-approval 3 months prior, because you don't want to be doing it 3 months when you're ready to buy and now you feel like you have to work on your credit, you have to fix some underlying issues, and that can extend that time further. So start off early, and then ideally we want credit scores to be anywhere between minimum 600 and above. Right? So the Bank of Canada, CMHC is looking at a minimum score of 600. Anything lower than 600, we technically cannot use income for that individual on the application, which could be a big detriment, right? It could be the fact that now that person has fairly decent income and now we can't use any of it. So we look at scores between 600, ideally to about like 640 is what we consider to be average Canadian. 680 or higher is considered to be really, really good. So obviously 680 or higher is technically where you want to be, because then you get access to the highest ratios possible, least amount of restrictions, makes it really, really easy to get approvals, right? The other thing I would recommend to my clients is kind of sign up for the Equifax alerts on the credit bureau, right? Something that it probably is not too expensive, but what happens is you get to take charge of your own credit, take ownership of it, right? I've had clients who have done that, and it's helped them kind of find out there was some, let's say, identity theft going on prior to it really impacting them. So little things you could do to take control of your own credit without just really knowing. So I would say a good portion of my clients, when I meet with them, they don't know what their credit is. So I'll sit down with them and say, hey, when was the last time you had your credit checked? Do you know what your score is? And I would say a good 80-90% don't, right? So you would want to be in the population of people that kind of does have an idea of their credit score, and then that way you can work towards it, fix it, and then kind of work towards getting approvals much easier. So what should you do if you have bad credit? A couple things you should do is first find out what it is that's kind of holding you back. Is it the fact that you have a collection? So ideally you want that collection paid off, because anytime you apply for something and there's a collection, that's going to impact you greatly. So make sure that's paid off. It kind of reports on the bureau that it's paid off. That would drastically improve your credit scores. Let's say you have some late payments. You want to kind of make sure what the late payments are and find out, and then maybe make those payments up, right? Don't have an outstanding balance. A lot of stuff that people don't realize is a really big one. You have, let's say, lines of credits or credit cards, right? So let's say you have a limit of $1,000. You don't want to come anywhere near that limit, or sometimes even go over. A lot of people don't realize going over your limit is probably one of the worst things you can do for your credit. It's probably worse than missing a couple of payments, right? So if it's 1,000, I like to tell my clients keep around 75 to 80% of that. So like $750, $800 max is what you want to go. Not even close to the limit or over the limit. That reduces people's score quite a bit. The other thing that people don't really realize that could really affect their credit is too many inquiries, right? So for example, they're walking through the mall, they see a kiosk for a credit card, they apply for a couple, right? Or they go and, even though, let's say they plan on not using it, or they go to a car dealership. This is very, very common. People go to car dealerships to look at buying a car. They're telling them they're doing one credit check, but most times or not, they're doing multiple. I've seen as bad as 13 checks on the very same day, which has reduced the client score drastically. And now he or she would have to wait 6 months or more to actually get back to where they were. So now that kind of puts their home buying plans a little bit behind schedule, right? So a lot of different things that you could do. So let's recap. One, what I would do is sign up for online, like the credit alerts, to see what's going on with your credit, find out what your score is, take ownership, something that you can work towards, find out what issues are, sit down with the banker or someone that knows how to read credit bureaus if you don't know how to read one, and get your credit to where it is. That's the first and probably the most important part of this process, is to kind of get your credit to the levels that the bankers and mortgage companies are kind of looking for. Other than that, just focus on that and pay it down.